हेलो इन्वेस्टर्स, वेलकम बैक टू अनदर एपिसोड ऑफ विशाल वेल्थ व्यू। मेरी पिछली वीडियो में काफ़ी ज़्यादा लोगों ने कमेंट किया। दे वांटेड टू नो अबाउट माय ईटीएफ पोर्टफोलियो एंड दैट्स व्हाई इन टुडेज एपिसोड वी आर जस्ट गोइंग टू spend some time understanding my ETF portfolio. I'm going to talk about which ETFs I'm holding right now, what's the expense ratio, why I'm holding these ETF. I'm also going to talk about what are the problems with ETF, why you should choose index fund compared to ETF. And then I'm also going to talk about what are my time horizon and goals regarding this investment. So without wasting much time, let's start this episode. So as of now, almost 78% of my entire portfolio is sitting in ETF. I am of a firm believer that it's really hard to beat the market. तो अगर आप मार्केट को बीट करना चाहते हो विच इज़ लाइक इंडेक्स निफ्टी 50 देन यू हैव टू प्रॉब्ली गो बाय investing in another index क्योंकि you cannot just time and predict entry and exit in each and every stock every time. So that's why I started by looking at indexes that are a bit more risky compared to Nifty 50 because I had a longer time horizon. Now, 25% of that investment in that ETF is in just one single ETF, which is ICICI Nifty 200 Momentum 30, which is 30 best stock or 30 highest momentum stock out of Nifty 200 space. Then comes small cap momentum quality 100 ETF, which is a collection of 100 highest momentum score quality score stocks in Nifty small cap to 50 space. Then we have Motilal Oswal Defense ETF. Now, this ETF is a combination of all the defense companies in India. Now, what's my reasoning behind it? So, I cannot deny the fact that defense sector is going to grow in India because government is also pushing towards manufacturing. They're also pushing in capital directly from the defense budget, and there's a huge push toward export of indigenous defense products. So that's why I thought that might be a good sector for me to invest, even though the valuation were a bit high because there was a lot of nuances and were happening, and again the trade war started, so this was one of the only domestic industry where I can see continuous growth coming in as the turmoil around the world was increasing. So यहाँ पे I think from 14% I'll take up to 30%. That's what I'm thinking, at least in 1 and 2 year, for next 1 and 2 year, because अगर अपन साउथ एशिया देखें, अगर अपन एटलीस्ट ताइवान स्ट्रेट देखें, अगर अपन मिडिल ईस्ट देखें, like war have been going on around the world for last 100 years, but this is a time where at least conflicts are scaling up, and every country around the world, be it Korea, be it Germany, be it France, be it any middle power or be it any superpower, they are all spending more money on their defense budget. So naturally it will push our government as well to spend more on defense, and that's the only reason why I'm investing in this particular index, because it gives me a good diversified growth across all the stocks. क्योंकि एक individual stock pick करने में it's going to be really tough for me considering the valuation of some of these stocks. So the fourth index is called Kotak Nifty Alpha 50 ETF. This is the highest of them all. I think this has a sample space of Nifty 500 stocks, and it is selecting only 50 stock with highest alpha score or highest absolute return. It does not care about fundamentals. So considering my time horizon is relatively high, like 7 to 10 years, I was comfortable investing in this because at least as per my research, the returns were better compared to Nifty 50 in the back tested when back tested. So let's try to read about each and every one of these indexes in detail now. Now, the first index that we are talking about is Nifty 200 Momentum 30. Now, this index tracks top 30 stocks out of Nifty 200 space based out of their momentum scores. This entire index is rebalanced every 6 months and every 12 months. So, two rebalancing in an entire year. And the weight are adjusted by like multiplying with the free float of the market. So, like if a larger company is giving you better returns, then the momentum score of that entire stock is going to be higher. Now, the individual holdings are capped at 5%. That means none of the investment that you're doing in that entire index is going to hold more than 5% of your capital. So if you're investing 100 rupees buying this index, then 5 rupees is going to one single stock at max. And every 6 months and 12 months, this rebalancing happens. Now, this is really important because when you are investing in momentum based indexes, one stock can really get a large amount of let's just say allocation in that entire index just in a short amount of time, and this can lead to, let's just say, bubble formation, and eventually when the price corrects, your entire investment is also going to correct a lot. So this is also a defensive measure that's present in this index. Now, if we talk about the performance as of 31st October 2025, the yearly return for this year to date return was negative 3.5%. 1 year return were negative 8.27%, and 5 year return were almost 22% CAGR. So what does this mean? Like for a longer time horizon, this index is able to beat Nifty 50. And that was my entire philosophy while investing in this index. Now, what are the risks associated with it? Now, let's talk about the risks. So, what are the comparison between volatility of this index and Nifty 50? If we talk about Nifty 200 Momentum 30 compared to Nifty 50, Nifty 200 Momentum 30 has a relatively higher beta score and is going to be more volatile. So when there are corrections in the market, the corrections are going to be painful if you are invested in this index, but that's also a good time for you to come back again, buy in even through a leverage way, and like enjoy the returns when the stock price or the entire index recovers. So that's Nifty 200 Momentum 30. Now let's talk about what are the stocks that's present in this index right now. As of now, majority of the constituents of this index are coming from financial services. 52% of this entire index is financial services. Now, you must remember that during the month of January to July, financial stocks were performing really well. And that's why this entire index got rebalanced into finance stocks. Some of you might say that, hey, this is a really dumb move because we are losing all of the return. But a lot of investors have lost money just by sitting on the sidelines and not investing in rather than just staying invested. So I think this is a better way to automate the shifts into the stocks that are performing well. And I don't mind if it happens 2 months, 3 months, or 6 months later, because good companies are always going to remain good over long point of time. We just have to figure out what's the value we are getting when we are purchasing them. So now I'm invested in this index through ICICI Prudential Nifty 200 Momentum 30. I think this has the lowest expense ratio out of all the offerings in the market. It has an expense ratio of 0.30. Now, this is a higher expense ratio compared to any Nifty 50 index that you can find in Grow. For example, SBI Nifty 50 ETF. Now, I think that's fine if you want to pay a little bit higher for more returns, but compared to index fund, what are the differences and what are the challenges that you might face? So ETFs are getting traded on a daily basis. Buyers are coming, sellers are coming, and then only trades are getting executed. So sometimes when you are trying to sell large chunk of your stocks in ETF, you might not find enough sellers. Or if you want to buy a large chunk of stocks through an ETF, you might not find enough buyer if the particular uh, like brokerage does not have a market maker. Like that means they can produce their own units on the go, and they can assign those units to you. So just read about that before choosing which ETF you want to invest in. Compared to index fund has one offering that you can start an SIP. You cannot start an SIP in ETF. Now actually that serves in my favor because I prefer like holding cash for some amount of time and then bulk investing when I think the market has corrected 4%, 5%, and when I think the time is a bit right. So because of that philosophy, I am using ETF to build up my portfolio, at least my stocks portfolio. Next we have is Nifty Small Cap 250 Momentum Quality 100 ETF. Now this index is also similar to Nifty 200 Momentum 30 index. The only difference is each and every stock is going to be capped by 3% and there will be total 100 stocks. So your entire investment is diversified even more. Along with that, since this is a small cap space, they're also going to consider the quality factor. So as you can see, the quality score for each company is determined based on return of equity, financial leverage, and earning per share growth variability analyzed during previous 5 years. So based on these five parameters, they're going to decide the quality score for each and every stock. And best 100 stocks are going to like be picked for this index. Now I thought rather than investing in plain vanilla small cap 250, I'll invest in 100 companies that have higher momentum or quality score. And that's why I thought this is a good diversification for myself as well. So if you see the capital allocation or sector allocation over here right now, it's 23% financial services, 13% capital goods. In terms of companies, MSCX has highest uh, weightage right now, followed by Manappuram Finance and then CDSL. So if you want to purchase this index, there are multiple offerings in Grow. Let's talk about that. So this index was launched back in 2024, and right now I'm sitting on a loss of almost 4.5%. I started investing in this index last year only. Now, if we see the expense ratio, this is on like again a higher end, 0.47. So you can invest in this index either through ETF or mutual fund route, through index fund route, and both are offered by Mirai Assets. Next we have is Nifty Alpha 50 index. Now this index is the most riskiest of them all. So the idea behind constructing this index is it will be a well diversified combination of 50 stocks that has the highest alpha score in entire Nifty space, and there will not be any capping. तो अगर कोई एक स्टॉक को बहुत ज़्यादा वेटेज मिल रहा है and its market cap is increasing in the index, it will start getting more allocation. तो जैसे अगर अपन अभी देखें तो 36% is financial services, and almost 6.9% is just BSE, 5% is PTM, and almost 4.5% is Loris Lab. So it's also diversified, at least more diversified than Momentum 30. But again, this index can go in a really skewed fashion because there is no capping. So I would not recommend this index for everyday investors. To some extent, if your risk profile is even moderate, you should not be investing any momentum or alpha indexes. For me, I am ready to accept that kind of risk in my portfolio right now, and that's why, based on my goals, I'm investing in these indexes. But for any normal investors who are just planning to start investing, first year, second year, do not invest in momentum or alpha index just for like returns, because when they're volatile, you should be having the guts to hold on to your investment while you're looking at your entire portfolio in red. So keep that in mind before investing in any momentum based or alpha based indexes. Now, this index is offered by Kotak. It's available in ETF form and index fund form. You can buy it on Grow. I started investing in this index back in 2024, and the expense ratio for this index is also similar to Nifty 200 Momentum 30 index offered by ICICI. It's 0.30. So, anyone who is willing to take more risk, make the portfolio more aggressive, try this index out by 2% or 5% of your portfolio. Next we have is Nifty India Defense Index. Now, if any one of you are thinking about investing in defense sector, this might be your entry to defense sector, because this entire index comprises of companies that have at least 10% of their revenue coming from defense sector directly, and they are going to consider 6 months average free float to select the companies and their weights in this entire index, and one single company is going to be capped at 20%. So again, some amount of diversification. You would not have to worry about the entire index getting like being formed by three or four companies only. So if we see current holding right now, Bharat Electronics is 21%, Hindustan Aeronautics Limited is almost 20%, Bharat Forge 12%, Solar Industries 11%, and then so on. The returns for this index in last 5 years was around 62% back tested. In last 1 year, it was 28%. Now, there might be a possibility that since in last 5 years this index has performed so well, you can expect correction. But I'm of a contrarian opinion that there is a huge amount of momentum coming from the government in the direction to grow our defense industry and modernize our military. And that's why I do expect the cash flow coming in for these companies as revenue is going to increase in the coming years as the world becomes more turmoil. So I, rather than investing in gold index or silver index that some of my subscribers have recommended me, I would rather build my hedge by investing in defense index, and that's what I am planning to do in the coming days. Now you can invest in this index through either ETF or mutual fund route. Grow has a ETF on this index. Motilal Oswal has a ETF on this index. Aditya Birla also has a ETF on this index, and multiple fund houses have mutual fund product on defense. So if we see the expense ratio of this index, it's 0.41. I started investing in this index back in I think March 2025, in the beginning of March 2025, when the tariff war was just kicking off. And since then, I was able to enjoy some amount of return. So I started investing back in April 2025, not March. And since April, I was able to build decent amount of capital till May, and I was able to enjoy good returns in this index back then. So what's my strategy? I think in the coming days, I'm going to increase my allocation in defense index, at least for 2026. And fresh capital that I am planning to deploy is mostly going to be in either Motilal Oswal Defense Index, or ICICI Prudential Nifty 200 Momentum 30. So let's see how things goes. Apart from that, there are some other companies that have seen some amount of correction, like Tips Music, Varun Beverage. I am rethinking about that investment. Does it make sense for me to buy more of these holdings based on the growth prospects? If I'll do that, I'll create another video about it. And that's all what I have for you for today's episode. If you enjoyed this video, do hit the like button and subscribe to Vishal Wealth View. Bye bye. Happy investing.